Welcome to FXcast. This is our FXcast market analysis video for Monday, May 2nd, 2011. In today's video, we'll look at some high probability trading setups. We'll evaluate the gold chart, come up with a low volatility watch list, an insight bar watch list. We're going to review the economic calendar to see how it affects our potential trades, and we have an education spotlight at the end. First up is a setup that we had in our prior video, the Euro-Aussie currency pair. We're looking at a daily chart with a trend of sideways to down. The pattern is a descending wedge, and basically what we're looking at is for a break below 1.3530. And then we have a couple targets if we do get that break and our stop loss. So let's pull up the charts and take a look at this setup. Okay, so what we're watching, again, is that descending wedge pattern, which is right around here. There's our support, and we can take our trend line and draw it around here. And actually, you can kind of see that our entry was 130, 35.30, and we're actually a little bit below that, but we're only 2-3 pips below the entry, so I don't think that the trade is over, but it basically has been triggered. And what we're looking for is once we break here and get a close below here, which we technically have now, we want to come down and test this area down in here. So our first target is in the middle, and then we want to come down all the way down to the bottom. So this trade is still setting up, and you can see as we come over to the hourly that our Bollinger Bands have already broken out, heading lower. So the trade's looking good. I still think it's in play. Let's go look at our next setup. Okay, and our next setup is the Euro Yen. Again, this is from our previous video, and it's still in play. And on the daily chart, we have a sideways to up pattern. We have an ascending triangle where we have a trend line coming from the bottom, and we have a downtrend line coming from the top, and we need to resolve ourselves above or below that. Since it's in sideways to up trend, we're going to say it's going to break above, but you really could trigger this either way. And there's a target is to retest the swing high, and our stop loss is below the wicks. So let's pull up the charts and take a look. So here we are, again looking at our Euro-Yen pattern, and we can see our downtrend line from this swing high and our uptrend line from this swing low, earthquake. And we're looking for this to resolve one way or the other. Now, what's a little concerning about breaking to the upside, originally when we had this trade, it was, this candle wasn't here, and so we were looking at a rising 3 pattern to break higher. However, we can see on the the 60-minute hourly chart certainly has gotten a little negative here on the past 2 days. But keep in mind, we said we can trade this either way. So if our trade was a break higher. However, if we break 119.75 to the downside, we have a trade also. Of course, we have to be cognizant of the 20 moving average. But when you look at it, the 20 moving average hasn't been respected too much lately. Broke right through it here, broke right back up through it here, broke right through it here. So I'd be more concerned about the 50 moving average. So there is a trade at 119.75 to the downside, and then we have our trade up here to the upside. Which way is this going to resolve? Let's go look at our third trade. Here on our third trade, we're looking at the pound-yen currency pair. Here on the daily chart, we have a sideways to up pattern. And what we're really watching is a doji at support. So really, this is another one where we could trade this either way if we break the high or low of the doji. And that's why there's no targets, because it really depends on which way you want to trade this. We've got a doji support, that indecision, and then now hopefully we can either resume the trend back to the upside, or we're going to break down into the channel below us and go lower. So this could really work for us either way. Let's pull up the charts and take a look. Okay, so let's take a look at this. We've got our support that we're putting in right here. You can see our last little swing high here. We've got an air kiss right here. Little pause right here with the doji candle here, wicks in here. So, and there's our doji candle right now. So there's a little support at this area. And so with this doji at support, we want to see which way this is going to resolve itself. Now, technically, you could even uh, draw in a downturn line and say we have another descending wedge. But that really probably doesn't come into play until a little bit lower. But so what we're looking at is grabbing on to our crosshairs here, and you can see we could play this above the wick at 135.80, or we can play below the wick down here at 134.95 for a move down to the 50 moving average, or for a move back up to test these wicks here. So this one is the market went with an indecision at support, and so we're going to let the market make its decision. Which way does it want to go? And you can see that we had low volatility somewhat. We did get this big red candle that kind of messed up our low volatility, which may imply that it wants to resolve to the downside. Certainly, in 2 days gives you that impression. But for the most part, we've been sideways, and so this certainly is going to have some momentum as it breaks to the upside or to the downside. On to the next trade. Okay, so our last setup that we're going to look at today is the euro dollar, and we're looking at a daily time frame. We've got an obvious uptrend on that time frame. If there's no pattern besides, we're just trending very nicely to the upside. But what we're going to look at is actually a counter trend trade, and that is because there seems to be a couple patterns that you can see with the euro dollar once we start getting bearish candles. So we want to break below 1.47. Our first target is about 50 pips below that, with our stop loss around the open of our previous candle. So let's pull up the charts and take a look. Okay, so what we're basically looking at is this beautiful uptrend on the euro dollar. And we've talked about this in our video before, where we have this propensity to move higher, give us a small candle, a red candle, pull back. Move higher, small candle, red candle, pull back. Move higher, small candle, red candle, pull back. Move higher. By the time we got the small candle and the red candle, eventually we pull back. So here's another move higher, smaller candle, red candle. So we're going to see if we can take advantage of that. And what I also like is, as I come over here to the 60-minute chart, is that we sort of have a low volatility set up here. Not the best one, but it is set up. And we can see that it's starting to resolve itself to the downside. So we want to see if we can take advantage of that by looking for a break. Now there's two ways to do this. You can go super aggressive as it is today, and go with a break lower of Friday's close. A little bit more conservative is let it get all the way down here and take this full candle out, or somewhere in the middle, because it's not quite to the middle yet. But our entry is to take out this whole candle. And if we take out this whole candle, that certainly would change the sentiment a little bit, at least small turn. Now keep in mind, this is counter trend, obvious uptrend. So our setup is, let's take out this whole candle and then trade it down to the middle of this bigger candle here. If you want to be aggressive, there are more entries in halfway through this candle, but that's a little bit more aggressive for me, and I'll let it. I like the market to tell me what it wants to do. I like for it to prove itself before I get in. So we're looking for a break here. We're not saying that the uptrend is over. We are just saying that the market wants to pause and just see if we can take advantage of this little pattern here of the small candle, red candle. Here we are with our gold chart, and I mean, obviously this is beautiful. We had the trade with a break here, which has resolved itself quite nicely. We even came back and tested what was once resistance became support, and beautiful trade. And I get emails sometime about, why don't you want to trade it now? Again, it's all about high probabilities. Could you get lucky? Obviously those people who got in on Friday did well, and more power to you. But it wasn't a safe trade. And you have to remember, there's always another trade. You don't have to force a trade because there's always another trade. So, it's always a uptrend. Let's wait for some type of pullback before we jump on into the next trade. Okay, we want to talk about our two watch lists. First is our low volatility watch list. And we do have one. It is not the 100% ideal candidate. Um, there is a little wiggle room here, but it is the pound yen with the top side of 135.995 and a low side of 135.335. And again, it's not the prime candidate. I give this about a B rating, maybe even a B minus. But it is something that I'm going to watch because of the potential setup, and we may be able to see this pan out at some point in the trading session. As far as inside bar watch list, we're looking at the dollar yen, the euro pound, and the dollar franc. And again, what we're watching on the inside bar watch list is we're watching the high and low of the bar and checking the momentum to see if we're going to get some type of break. We have a big candle. Now we have our inside bar within that candle, and we want to see which way the market wants to break from this inside bar. And so, in our education spotlight, we want to ask you a simple question, and that is, what determines your state of mind? We all know that trading is as simple as recognizing a pattern, making a decision about that pattern, and enacting a trade. But the problem is having that psychological capital to act upon what you see. I often tell friends, trading's not easy. Controlling your emotions is. And so, again, what determines your state of mind? How do you become or develop that trader state of mind? And the one way that you can do that throughout the day is by the questions that you ask yourself. And so, what have you done today that's going to help you for tomorrow? What lessons have you learned from today's trading session that's going to help you perceive the market, make better decisions about the market, and then act better on your decisions on the next trading session? And I think about throughout the day, questions that you can ask yourself are: am I bullish on this pair right now, or am I bearish? What will I do if this happens to this currency pair? How am I going to manage my open trade if this happens? These questions that you can ask yourself, either as a part of your criteria to a setup, or just a way to keep yourself engaged in the market so that you're prepared when these things happen and you're not caught off guard or you're not emotionally acting, helps you perceive, decide, and act better. Do you have the trader's mindset? Thanks, guys, and I'll see you next time.